A tremendous amount of capital investment is going to be required over the next 30 years to get the world to net zero emissions. And one of the ways to mobilize that capital is through green bonds. And Glen Hodgson, who is a senior fellow at the CD Howe Institute, has written a study on it recently. We're going to talk to him. So welcome to the interview, Glen.
It's great to be here.
So why don't you start with, give us an overview of your study, please.
Well, when I write, I try and write for an intelligent lay audience. I'm not writing for other experts. I'm writing for people who, with a bit of work, can get up to speed on a topic. So I basically set the landscape. I tell people what green bonds are, which is a debt instrument that's used to finance, as you said, things that are going to either be part of the transition or reduce greenhouse gas emissions across the board. I then describe how the market's developed. It's actually developed over about the last 15 years. Had a spectacular growth rate in 2019 of over 50% globally, 63% growth in the Canadian market, which we thought was going to spill into 2020. Then the pandemic happens. So we're now in a period where will the market recover? What else can be done to help the market recover? I delve then into what the federal government's role could be to actually shape the market by issuing itself, and then some of the key decisions it has to take to make the market work. Things like timing, the size of the issue. Feds don't want to crowd out the private sector. The key factor is going to be the conditions, the standards that the feds adopt, and I go through the international standards. And I like giving advice, and so here's a chance to do the background analysis and give advice to the feds on how to issue their first green bond.
Now, Glen, I've been around for a little while. I remember the dot-com boom during the 90s, for instance, and a lot of that had to do with the amount of capital that flooded into the telecom sector. And I think what we're seeing now is the similar flood of capital into the clean energy and clean technology sector. And what role are green bonds playing in that process? Are they a significant part or a strategic part? How would you describe it?
Well, it's small right now. I mean, it's really a very small share of the overall global bond market, like 2 to 3%. But it's the fastest growing share. When you have a growth rate over 50% in a given year, and there's an expectation that was going to continue going forward, clearly its share of the global bond market is going to grow. And it really gives a chance for green investors, people who want to invest in the low carbon economy going forward, to have a targeted instrument that's going to focus on high quality borrowers as well. I mean, the issues are all high quality corporate names and governments, but it really allows investors to focus their capital on projects which are clearly going to be trying to reduce emissions going forward. So it's a nice matchmaking facility. It's not that big yet, but let's come back in 2 or 3 years. And I expect green bond market will just keep growing double digits for a number of years to come.
So who's issuing green bonds and what kind of projects are they financing with?
Well, initially, the green bond market was created basically by the World Bank and the European Investment Bank, which are the two biggest institutional development borrowers in the world. And of course, they were borrowing money in green markets to fund their own projects, which were all about shifting from oil and gas towards renewables, reducing emissions in industrial settings, and dealing with the high emission sectors, for example, like petrochemicals and cement. And speeding along the transition towards a lower carbon economy. Right now, it's kind of everybody. You're having banks, development institutions, corporate borrowers of all types, and governments. And in Canada, of course, we have 3 levels of government, actually 4 if we add the Indigenous communities. But the feds have borrowed through EDC. We've had provinces borrow, and a whole variety of cities as well as business. So it's kind of everybody's coming to the party, one by one. It's not a huge number yet, but for example, Scotiabank put a green bond issue out last year. So it became the second or third bank to put a green bond issue in the market. And CPPIB, institutional borrowers, kind of all types.
Right. One of the things that I think has been a perennial problem in Canada, particularly for startups, is access to capital. And because innovation is such a key part of the energy transition, and startups are such a key part of driving innovation, is it likely that green bonds will play an important role in fostering innovation through startups and other companies?
I guess the answer is it could, but the startups are going to have to be part of a bigger entity. So, for example, Brookfield Renewable, which is one of the bigger sort of green investors listed on the Toronto Stock Exchange, put an issue out, put two issues out 2 years ago, and may have issued again last year. So startups probably can't access the green bond market themselves directly because we're talking big numbers. We're talking issues of between $200 million up to a billion. So you got to be fairly material in size. But a startup could, for example, have part ownership, be partly owned by a firm like Brookfield Renewables, and therefore it would gain access to the green bond market that way.
So if I understand this correctly, a larger entity floats the green bond, gets it financed, and then invests in smaller companies like startups.
Yes, smaller companies, bigger companies, uses it to fund their own ongoing activities. But it really is, you need a critical mass of size to really have an effective role in a bond market, because you want to be able to borrow. If you're not going with kind of a big volume, you're not going to get a very attractive price, and therefore you have to pay a lot more for the money you're borrowing.
Glenn, last question, and maybe we could be fairly concise on this, is what have you suggested for the federal government? What kind of regulations and so on are required to stimulate the green bond market?
Well, the first thing that I've recommended is that they choose the right standard. And there's basically 3 standards out there right now. There's a voluntary one from the International Capital Market Association, which a lot of private companies are using as a issue. I've suggested the feds look at the EU standard. The EU now has a green bond standard that they authored last year, put in place in the fall. And we don't have to be kind of slavishly follow what the Europeans are doing. But I think it's a useful reference point because it could become the de facto standard in the world. Also consider things like, what's the size of the initial issue so they don't crowd out the market, but they actually have a material presence. So something like $500 million might be the starting point size for the feds. And then I consider a whole bunch of other issues, including whether tax incentives are needed. That was one of the recommendations of the expert panel report 2 years ago. I actually don't love boutique tax incentives very much. I'd much rather have low tax rates. And so I've suggested a wait and see attitude, but that gives you a sort of a sense of the kind of decisions that have to be taken, the recommendations we make.
Glenn, thank you very much. Really appreciate this.
It's always a pleasure.